It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, covering the very latest in property news every morning. Of course, we do that 7 days a week, including the weekend, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Up to a Sunday, May the 5th today. And another very busy week, of course. Plenty of interviews. We talk to hundreds of people every year. And on Monday, it was Blair Chapman's turn, the ANZ Senior Economist, about the housing market. And we spoke about what ANZ is expecting from the RBA for the rest of 2024 and what is likely to happen on Tuesday. And then on Tuesday last week, we spoke to Fiona from Q Shelter in Queensland about the homelessness and some high rentals. And we also spoke to Justin on the Gold Coast about $500,000 properties that you can buy and what areas they still exist in that price range. And over the last week, we spoke to Eliza, Owen, the head of residential research from CoreLogic, about April's increase in property growth. So that is all coming up on our Sunday. If you're out looking at homes, perhaps you're going to an auction today. Whatever is the case, good luck and have a great Sunday.
Decode the property market with insider knowledge and insights to better navigate your real estate journey on the Real Estate Podcast.
It's a staggering statistic for those trying to enter the housing market, especially in Sydney.
Yeah, it's a big number. I think what we've really got an issue with in Sydney is the availability of housing, or particularly houses. So when you look at units, obviously the number hasn't gone up anywhere near as much. And it really is that house on the block of land that's really gone up and become sort of unaffordable in Sydney, much more so than apartments and units.
And the time, of course, that it takes to save for this deposit. Now, it's increased to 10.3 years. That is nationwide. So how is this extended saving period affecting prospective home buyers, and what are you seeing around that?
Yeah, so it can really be off-putting because it is such a long time now for people to save. And I think we have seen first-time buyers sort of fade out of the market a little recently, but I think there's now a fear of missing out. And for those who have got close to the deposit, they're really starting to come back into the market right now.
And being an economist there at ANZ, of course, there's all sorts of commentators around Australia weighing into the real estate market. I wonder if you agree with many of these commentators that are saying many aspiring homeowners are effectively locked out of the market due to insufficient borrowing capacities, because it has sort of gone backwards for many people.
Yeah, so when interest rates rise as much as they have, it really does become difficult to assess borrowing capacity when you've got to think about it's not just the current rate, but it's the current rate plus a little bit more that borrowers need to have to be able to service. And we've really seen that skyrocket over the last couple of years with the RBA interest rate increases.
And just off the back of that, would you be surprised to see the cash rate go up between now and the end of the year?
Given the volatility we've seen in inflation recently, I wouldn't be surprised, but it's not our base case. So, there are some commentators suggesting that the interest rate needs to go up again after last week's CPI, but we're of the view that the RBA can be patient. They know that their actions do take, 12 months to 2 years to sort of have an impact. And, the last time they increased rates was only in the last quarter of last year. So that's still sort of flowing through to the economy right now. And we don't think it's the likely case that rates will go up.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
You're already under the pump, and this just sort of adding to that pressure cooker.
It really does. It's a very, very challenging time. And the reasons for why it is so challenging is because there has been a lack of long-term population-based planning for how much housing we need to meet the needs of Queenslanders. And that requires using data that we do have available to us about population predictions, which are based on a range of things in terms of birth rates, but also projections around inward migration. It's very, very important to get that long-term planning right. And you mentioned local governments before. They play a critical role because they develop planning schemes which says how much land there's going to be, what the zoning of that land will be, where we will site residential and other development. So that's a very, very important thing to achieve.
Okay, so just in terms of local government, just how much of a political football is that at the moment? Because one gets the impression that you guys are sort of hard up against it when it comes to local government.
Oh, look, I can say that there's been a lot of hard work done by local governments to develop planning schemes which interpret housing targets, which is very important. And there are over 20 local governments around Queensland working on housing action plans as we speak. So there's a lot of really positive things happening. Local governments sometimes have land, and some of them are in a partnership with not-for-profit community housing providers to help those community housing providers use that land to build social and affordable housing. The much bigger picture problem is that we do not have enough housing supply to meet the total population's demands.
And right now it is time for another 30-second property tip. We're going back to Mooloolaba to Hamish Balderston. And Hamish, what have you got for us this morning?
Look, I think for anyone looking to buy into a holiday unit complex where there's on-site managers, it's really important to understand what you can and can't do with those properties. Some people are coming up and buying those for Airbnb type situations, but what I'd suggest to most people is that they look into the strata rules really carefully there, because often we've found buyers have not done their due diligence buying and then finding that they have to rent them through the on-site managers where the returns aren't quite as good as what they would have expected.
Certainly. Yeah, my family my grandfather bought the block in Kira on Miles Street for 50 quid, and we were the 72nd phone line connected in 1946.
Your market is selling under 500K in the Southern Gold Coast, units under 500K. So talk a little bit about that, because there will be first home buyers that will be thinking, okay, that sounds reasonable. Tell me more.
Yes, there is the odd gem, particularly more so in New South Wales on the other side of the fence in Tweed Heads. You can still find the odd property under 500. They are very, very rare to come by. I would recommend, if any first home buyers are interested, to get on people's databases, because in that price range, they're learning quickly. Anything under 650 is just flying off the shelf and multiple offers. And unfortunately, when they miss out 2 or 3 times, they learn very quickly. But there is some options in Tweed Heads West where you can still find good value, and there's no doubt growth is assured. You can see that the next 5 years. As Coolangatta gets too expensive in that postcode, the capital growth just flows over. I highly recommend any first home buyers to consider the Tweed Heads, Tweed Heads South, Tweed Heads West, Benora Point, if you can find something, because Kingscliff's expensive south, and then Coolangatta North, expensive north, and there's this little enclave pocket of affordability that's still available for people if they want to get in. And I think they can't go wrong if they've got a 5-year plan in the Tweed area. Coolangatta, I don't even know if I can get any 1-bedrooms around 500 anymore. But Tweed, which is only like 5 minutes that way, you can still find the odd price point.
Now, we know that the area is starting to really develop and mature, much like the Gold Coast, the northern Gold Coast part. So tell us a little bit about, since the COVID broke out, it was into lockdown, which was never fun for many of us. And then after COVID, things started to sort of mature, a lot more interest as a result, I think, because of that example that I gave with Southport. Those properties, they're starting to get quite expensive, but there is some affordability where you are.
It took a little bit to recover here in Coolangatta Tweed. It took about a good 12 months. That border lockdown, we were sort of very much forgotten. Anyone Kingscliff South didn't know anything was going on. Anyone Corumba North didn't know. We were sort of like just left off the table, but it really did impact businesses and lifestyles. It was quite tragic. It took about 12 months for businesses, maybe about 18 to recover. The peak of COVID the market was, say, February, March 2022. We've just really noticeably recovered now, but you didn't really feel that until about first quarter, no later than, say, June last year. We sort of came out of that, and then came in the baby boomers and the lifestyle seekers that have just, what was interesting about Coolangatta is the apartment market didn't drop as much as the houses. Credit to the downsizing people. But the southern Gold Coast, the secret's out because we have a perceived better lifestyle, which is, I think, in my opinion, so true. And so the coast is interesting. It's sort of like Burleigh South, and then Burleigh North is like a different type of feel. And the southern Gold Coast is a lot more generational, a lot more tightly held, less transient, less density. Due to the geography, it's also just got, a bit more water, a bit more trees, and it's just overall just a better feel, in my opinion, for people. Like Burleigh North has just become very, very busy. People from North are coming south, people from south are coming here, and it's just a different flavour to what it was before COVID, but the whole coast is experiencing that. But this place is definitely not going to be going backwards anytime soon.
Let's explore together the power of real estate. We keep you better informed and updated.
Let's look at April's increase, which takes the current growth cycle into its 15th month, with housing values up 11.1%, or approximately $78,000. So tell us a little bit more about that.
Absolutely. This is a really resilient result for Australian home value increases. And it's pretty counter to everything we're seeing in the economy at the moment, which is a slowdown in economic output, weaker consumer sentiment, depleted household savings rates, and of course, higher interest rates. But the property market has managed to keep rising because it's being driven by cheaper markets in particular. So Perth, for example, which has a relatively low median of $721,000, rose by 2% in the month. And we're also seeing that there's resilience because of tight labour market conditions, where people are able to keep servicing home loans. And it's possible that a lot of the people taking out debt at the moment to buy aren't having to take out as much. So downsizers or people who are selling an asset to buy something else is making up a little more of the owner-occupier buyer pool.
And when you look at the lower range of markets in terms of cost for the entry point, obviously you're talking about the Perth market there, they are recording stronger growth. That is certainly coming through in the report. So tell us a little bit more about that, because I note that the report isn't including places like Darwin as one of those cities.
Yeah, so I think the other added trends here are in migration. If you look at Perth, that's seen internal migration really turn around. In the September quarter of 2023, net interstate migration to Western Australia was over 2,000 people. And that's off the back of a decade average pre-COVID of minus 95 for the net interstate migration result. So what this means is that more people are settling in WA than are leaving the state. This is in part fueled by very strong labour market conditions, and that's sort of caught up in another mining upswing as well that's utilising a lot of construction labour. So it's attracting people to the state from a job perspective, that's subsequently having an influence on housing demand. There's also anecdotally this rise in interstate investment. So people on relatively high incomes on the East Coast who are looking to markets like Perth and Adelaide as, again, these relatively accessible markets. And I say relatively accessible because they're cheap in terms of other capital city median values, but it's worth noting for a city like Adelaide, for example, home values have increased the equivalent of $300,000 at the median level in the past 4 years. So even though I say relatively cheap, for people who have been in those cities for a longer period of time, the past few years have been an extraordinary increase in value.
And it's a Real Estate Friday, talking all things property and looking forward to another weekend, and good luck with any property transactions coming up. May you be successful and as happy as the cat who got the cream regarding chasing any properties. Well, Eliza, Owen, the head of residential research from CoreLogic, is back with us this morning. Eliza, regional markets, now they've been the darling hotspots for many first home buyers. You were talking just before the break about Adelaide and the growth there. First home buyers, of course, moving into different areas around Australia. Although regionally, things are heating up with a bit of a surge in growth. And this is a real problem for those first home buyers wanting to move regionally. So where is this market at compared to capital city pricing at the moment with CoreLogic's report?
Regional markets have shown a slightly stronger quarterly growth rate over the past 5 months than the capital city counterparts. So following a 10-month period where the combined capitals index was outperforming, we can now see that value movements in regions are overtaking, and the strongest regional performers kind of mirror what we're seeing in the strongest capital city markets. So regional Western Australia led the pace of quarterly gains at 5.3%. That was followed by regional South Australia at 3.9%, and then following that was regional Queensland at 3.2%. While you're seeing declines in Melbourne, we're also seeing slight declines in regional Victoria, which was down 0.1% over the quarter, and it was the only state to actually record a decline in that period.
The RBA next Tuesday, they're going to be meeting once again. There's a bit of a changed outlook for the interest rates. I'm going to ask you about how you think that is going to impact on people. But first, what do you think is likely to happen on Tuesday? Do you think they're going to keep it in a paused situation, or are they going to move?
I think it's most likely that they will hold at the next meeting. We did see a little bit of a re-acceleration in the quarterly inflation figures, but they're still broadly in line with RBA forecasts. I think at the start of the year, there was a lot of consensus around the outlook for where interest rates were going, and that was likely to be a cut in Q4. Since we got tight labour market readings through the start of the year and that slight re-acceleration in inflation for the quarter, the forecasts have really fanned out. And some of the major banks are still saying there could be an interest rate cut as early as November this year. Some are now saying that could be blown out until early 2025. And some bank economists are even expecting there could be another rate increase. You know, whether you think it's going to drop or move higher, the sheer uncertainty of the outlook, I think, is likely to put downward pressure on home values, just because of the added uncertainty and what that's going to do for consumer confidence. So in the short term, the supply-demand mismatch of property is probably enough to keep it increasing in the short term. But as we get to the longer term, end of the year, that's where we could start to see growth easing.
We connect you to the best real estate information across Australia. The Real Estate Podcast.